Hello, if you're a shareholder of OKH Global, you ought to be reading the annual report. But first, here's a brief summary of what the company is about and the sort of things that will be talked about at the AGM. Of course, me standing here talking to you is not a replacement for you reading the annual report, so make sure you still do that. In essence, OKH Global is a construction and development company, and here are some of the artist's impressions and images that you'll find in the annual report. They, in essence, build industrial properties, and one of the main contributors, in fact, to the revenue that they announced recently was, in fact, the Prime's BizHub property in Woodlands here in Singapore. More than 380 units, fully sold, boosted revenue quite tremendously. But before we get into all of that, let me tell you a little bit about the history of the company, which used to be called Sino-Best Technology, as the company's name suggested at the time, at least, was involved in IT in China. They then received a reverse takeover offer that was mid-2011, a deal that was consummated by the end of 2012. In June, they then voted at the shareholders' meeting to distribute the shares in the technology business in specie, that is, distribute the shares to the existing shareholders. So the members who go to the annual general meeting will, in essence, be looking at a pure play construction and property development company. All right so far, because these things are very important when you are about to look at the earnings numbers, because as we always know, construction and development companies have very lumpy earnings, and the company acknowledges this in its annual report too. Here are the revenue figures over the last 5 years, and you can see that zigzag in particular. The most recent bar here, obviously, is the tallest one because they did have a record year because Prime's BizHub was sold and sold out, in fact. Gross profit, here we are, very similar pattern, and the net profit too, although what's noteworthy about that $40+ million profit figure is that, once again, the property development part of the business has really started to kick in, and you can see what a difference that move from the IT industry across to property development has made. Now, the future obviously is going to be important, and for that we turn to the CEO's statement with a picture there of Boon Wenfeng, who's also the majority shareholder, 62% shareholder to be precise, the 15% stake that they own in Pan Asia Logistics, together with the joint venture that they have with that company to run these industrial properties, logistics-related properties in Singapore, Malaysia, and Korea. All of those, we're told, is already kicking in terms of their contribution to the business. So it's not just about construction, not just about property development, but because of their joint venture and that 15% stake, they also have an interest in actually managing the logistics aspects of these buildings. The commentary is not terribly detailed. You're not going to find specific profit forecasts in there, but fair to say that they do point out that already the turnaround has been put into place and the company is going to grow from here. Let's take a look at some of the other key financials. First of all, this is the cash balance, more than $80 million. And also noteworthy is the fact that they have properties under development of around $287 million. So that's a very substantial chunk when you consider in particular that revenue in the year under review was 240 odd million, 287 million yet to come at some stage. There is obviously quite a bit of money still in the pipeline. That's on the plus side. On the negative side, they do have some bills to pay. In fact, their trade payables there at just below 160 million. They also owe around $150 million in short-term debt and under the current liability section, and they owe a further 130 million odd in more than 12 months from now. So you can see that, yes, they do have cash, 80 odd million, they do have properties under development, almost 290 million, but they obviously do also have to pay back the banks and make sure that their suppliers are paid as well. One item that retail shareholders in particular always like to focus on is what are the directors going to get paid. That's resolution number 2 at the AGM, and it's going to be bumped up, if shareholders agree, from 130 odd thousand to 170 odd $1,000. In the context of the sorts of numbers that we usually see under directors' remuneration, that's actually a relatively small amount. But there you have it, one of the resolutions that you'll be voting on at the annual general meeting. Make sure, of course, you read the annual review before you go.